So yesterday we were looking at what? Yesterday we were looking at. For those that are joining us for the first time, don't worry. We shall do a recap. That should be on Saturday from the beginning until where we're going to end on Friday. So for today, we're going to start where we ended with the other guys. We actually started this class on Monday. So yesterday we were looking at market structure, not so. Yesterday we were looking at market structure where we talked about the bullish market structure and we talked about the bearish market structure, how to identify a bearish market structure and how to understand how the market behaves in either a downtrend or what an uptrending market structure. So I hope everything was hit and I hope it's well understood. If it's not understood, please feel free to ask questions before I proceed to this next topic. Is there any questions about market structure? I guess there are no questions about market structure. So before we can actually start this topic, which is market patterns, I just want to go back on the charts a bit and just to explain what we talked about yesterday. So yesterday we looked at, what pairs did we look at yesterday? Those that joined me, what pairs did we look at yesterday? So this is GBP USD, and I think we looked at Euro USD
and USD card.
We looked at USD card. So this has been our analysis from I think last week, where we started analyzing this Euro USD from when it was still inside this and until it broke out. Then sorry. Then yesterday we looked at Euro USD during our previous class when Euro USD was somewhere at this particular point. That's where we were talking about the topic which has to do with market structure. So yesterday I told you guys to say what I do the first thing when I open my chart is to understand the structure that I'm trading in. It's always market structure always makes it easier for you to understand what you have to do in the market when you pick out or identify what type of market structure you're in. So by simply looking at this structure here, what is the current market structure that we are in? What market structure are we having here? Mr. Christian. Simplis.
The first market structure here is a downtrending market structure.
We're having what? A downtrending market structure.
Downtrending market structure.
We're having a downtrending market structure. And how do we define or identify a downtrending market structure? How we identify a downtrending market structure, it's simply by looking at how the market is selling more and consolidating, or it gives us, or the market, when we are under a bearish market structure, the market intends to sell more, buys less, sell more, and does what? Buys less. Yesterday, we're actually looking at your USD when I told you to say this is actually a clear bearish market structure of which we expect the market to break to break below this pattern here, which we have in here, strongly to where to this level and as well as to this level. Yesterday we talked about this pattern here, where we talked about these two type of patterns, where I told you guys to say when I'm looking at these market structure patterns, the first thing that I look up to is to identify the momentum and also to add these continuation patterns, which is a bullish flag and as well as what a bearish flag pattern. So this bearish flag pattern will help you to know how to make entries in a downtrending what market structure and as well as in an uptrending market structure. So as we're having Euro USD, that means this is a pair, this is a type of pattern that will suit what the bearish market structure. If we are to look at the name of this type of pattern, is going to be what? Bearish flag pattern. That means it is used when the market is in a bearish trend or in a bearish market structure. So we talked about how to make entries in such a trend where we said when the market is in a downtrend, that means we are going to have what is known as what? A bearish market structure. We are aiming to see the market consolidate here. That means this pattern has got two market entries. It gives us two opportunities for us to enter the market. One, we have got the first entry, which is at this particular point, which is at resistance. Let me put this thing to be sell opportunity. So opportunity one. Let us say just sell one, so entry one, so entry what? So entry one. And from there, we expect the market to give us this sell entry one, and we'll be aiming to catch another entry once the market does what? Once the market breaks this what? Breaks this pattern here. That means we'll be aiming to catch it at that particular point. This takes us back to where I'm saying these type of patterns, they give you two opportunities in order for you to join this trend here. There is the first entry here and there's a second entry at this particular point, which we're going to say it's sell entry what? 2. So this is how to make entries according to this type of what? Pattern. So we have got the first entry here. And we have our second entry that can be at this particular point. So just in case you have missed this entry here and you are a person, sorry, I haven't shared this screen. Which screen am I at? Okay. Are you able to see this screen? Okay.
Yes.
So I was explaining to say when you understand market structure and you understand how to use how to use a bearish continuation flag and how to use a bullish continuation flag, it will help you understand how to make entries or how to join a trend. But first, before we can actually step into this, you have to understand who you are in the market. We are retail what? Retail traders. Who is a retail trader? A retail trader, this is an individual that trades for his or her own benefit. I am an individual and you are an individual as well. That means we are not trading for anyone. We are trading in order to see our own what? Our own profits. So that's who a retail trader is. And the other thing that you have to know about this a retail trader is that as retail traders, we don't have the power to move the market. We don't have the power to move the market. That means no matter how many anticipation we may have, we don't have the power to move the market. That means the reason why we are learning about these strategies, blah, 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 it's because we want to find a possible market entry to join a moving trend or to join the trend. So us analyzing or learning about this whole thing, it's not because we want to be moving the market. No, the only people that move the market are known to be the big boys or the market makers, which are going to be saying the banks, the institutional traders, and liquidity makers. So these are the people that only moves the market. As for us, we don't move the market. That means we have to follow what the big boys are doing. Once you go against the big boys, they will smash you. You're not going to make any money. You're going to endure losses. So we wait for the big boys to make a move, then we enter the trade. Okay, so when you understand how to trade this type of a pattern here, it actually gives you two market entries. Which one? This is the first entry and entry point what? Point two. Point two. So just in case you missed this entry here, you can actually catch or join this trend at this entry point two at this particular point. Where if we bring in Euro USD here, you find that we'll be looking to have what? We'll be looking to have our sell entry one from here, and I'll be looking to have my sell entry point two from where? From here, once the market does what? Breaks out. So if we are to go back a bit, you'll find that this was an entry here where we'll be focusing to put our stop loss just slightly above this pattern, and we're going to be aiming to take profit at our nearest support, which is at the yellow zone. Then from there, we have got our entry point two, which is at this particular point, and just putting our stop loss slightly above our previous candle, which is that point there. So slightly above our previous candle there, where we're going to be aiming for this take profit two, which is at that support. So this is the point where I said understanding market structure, it's very important because it will make you understand to say the main reason of the market giving you this pattern is to give you this long shoot at this point, which is this point. That means when we are in a downtrending market structure like this one, the main reason for the market, where is this pointer? Okay, so the main reason for the market to give you this type of movement, which is this movement here, is to gain enough momentum from this resistance point, which will enable it to break below this point here. So once the market breaks below, or once the market gets to this particular point, it's aiming to come and disrespect this previous low in order for it to create what? A new low. So as a person who understands simple market structure will understand to say, if I make an entry here, this is actually a high probability setup that can actually give you a lot of money at the point where you can either double, triple your account from a 500 to 1,000, from 100 you can able to make a 250 out of that. Simply why? Because you caught the market on a high probability setup, which is this particular point. And from there, we had our other high probability setup, which was this particular point, where I told you guys to say tomorrow, which meant today, because we had the previous class the same time as we started. We said tomorrow, since we missed this entry at this particular point, we can aim for the market just below this particular point. Then we're going to be aiming to put a stop loss just slightly below the previous candle that will be made, above. Then from there, we'll be aiming to take TP from here and TP2 from where, from that particular point. And looking at this, if we entered at this point, would have actually been in profit. And from there, if you had to put your TP from there, you would actually be in profit, or your TP would have been hit. But for those that are actually waiting for this, you'd have actually been waiting to hit this TP at this point. But we're still waiting to see how the market is going to move, because when you are trading, or when you are you know how to use trading view, you can actually see by this bar here that we're having sellers present in this type of market. That means the market is still selling, it's still in a selling mode. That means we can expect it to reach what? To reach this particular level here. Are we following? Is there any questions? Mr. Simplist.
I know everything is clear.
Okay, so this is what we actually talked about yesterday. And yesterday I mentioned something very important, which has to do with DXY, which had to do with what? DXY. So this was the chart that I was actually giving an example on. We talked about this movement here, which is a downtrending market structure. And we actually started talking about this uptrending market structure. So yesterday I told you guys to say, for me, I'm still waiting for GXY to break above this particular point, to break this this pattern, for me to start looking for what? For buying opportunities, of which it actually did. We can see how the market spiked to the upside, simply because what moves the market, this is one thing you have to know. What moves the market? It's market structure. Once you understand market structure, you'll be able to understand the behavior of the market. So in order for you to understand the behavior of the market, you firstly have to understand market structure. So here we're having what? This move and that move. What do we expect? That move. So we know to say, in an uptrending market structure, the market gives us this type of movement, where it gives us a zigzag pattern of movement to the upside. That means it gives us a series of what? Higher highs and what? Higher lows. Higher highs and what? Higher lows. So whenever the market gives you this movement here, which is this move, is to find a strong support to gain enough momentum to disrespect or break above the previous what? Previous high, which is this point here. So the market is looking to break above the previous high, and we are still aiming to see the market touch this level, and this level probably also get to as high as that level there. Simply why? Simply because we are in a bullish market structure. We expect buyers to be much stronger than what? Than sellers. So we expect the market to buy more, sell less, buy more, and sell less. So this is one of the setups, or the pairs that we looked at yesterday's online class. And we also looked at I think this pair, we looked at it a long time ago, but we didn't look at it yesterday. But looking at how we analyzed it last time we met, we can clearly see how the market beautifully moved to this level here. Yesterday, which pair did we look at? And again, today I didn't trade that much because I was making a bit of movement, but I actually had to find USDJPY. It's at this particular point. So if you can look at the behavior of USDJPY from this point to this point, what do you observe? What's your observation from this level here to this level where it is? What's your observation? What can you observe there, Mr. Moses? What in terms of market structure? Yes, Kondwani Zimba.
The market has become bearish now.
The market is actually in a bullish market structure. Bearish means the market is going down. Bullish means
My bad. Yes, bearish, bullish.
The market is actually what? In a bullish market structure. And how did we know that the market is now in a bullish market structure? By simply seeing how the market strongly pushing to the upside, and it's actually giving us small selling distance compared to how the market is buying. So when the market is in a bullish market structure, we expect the market to buy more, sell less, buy more, sell less. And I remember it's not really yesterday, but I think last week we actually analyzed this pair together. I don't know, for those that were present with me, we actually caught this market, which was on a Sunday. We anticipated this move on a Sunday when the market was opening. From there, we can see how the market gave us this short move and the long move at this particular point. This is a sign, or this is a bullish market structure. We expect the market to buy more and sell less. Once the market gives us this correction here or this consolidation in this manner, we expect a strong or sharp move to the upside. So for those that don't really know how the market moves in a downtrend or in an uptrend, this is how it actually moves. So we're having a bullish market structure here where we see that the market, when it's moving in an uptrending market structure, it actually gives us what is known as, or a pattern known as what? Higher high, high low. Higher high, high low. And when the market changes its direction from an uptrending market structure to now a downtrending market structure, the market actually gives us what is known as a low high, lower low, low high, lower low, low high, lower low. This is the movement of the market. An example of how the market moves when it's an uptrend is that it gives us a higher high at this point, sells less, buys more, sells less, buys more. This is the nature of the market. And yesterday I mentioned something to say, when the reason why we are learning about this, it's for us to avoid making unnecessary market entries, making late entries, silly entry decisions, and poor risk management, where we start making buying opportunities at this point. When you know to say, okay, the market's at a higher point, it has to do what? It has to sell. The forex market, it's made up of simple rules that we as individuals, we aim or intend to break. Which are these rules? These rules are simple, which is sell high and do what? Buy low. These are the simple rules that we intend to do what? To go against, to outsmart in other ways. Why? Because we think we are able to move the market. You are not able to move the market. Neither am I able to move the market. So for me, I really take what's actually the joy of a trader. My joy, personally, my joy is to actually see the market respect my analysis, is to see the market go in my direction. In that way, in that manner, I'm very happy despite me making profits, but my happiest joy is to see the market go in the way that I anticipated. So how this simple rule works is that while there is a red arrow here, this indicates that this is a selling point. Where the market bought from a low point, this is a high point. We expect the market to do what? To sell. Sorry. So learning about market structure, it helps us to avoid making unnecessary entries. Where because you missed all this, you'll be forced to start making buying opportunities at this point, of which your account, our small account, it's not going to manage this drawdown. Let's say if you're having a $50 account, then you make late entries at that point, then you start going into a drawdown. Your $50 account won't manage this drawdown. Your $100 account won't manage this drawdown. So the main reason why we are learning about market structure, it's for us to find a perfect point to apply proper good risk management on our account by catching the market or buying the market where it's going to start rising, which is at this blue point here. Is it making sense? Is it making sense?
Yes.
Yes.
Okay.
Is this?
So this is the importance, or this is the importance of learning about market structure that I discovered when, for me, I actually went through a lot. Honestly, I went through moving averages, I went through indicators, I've been scammed about robots and so many other things. So the time that I decided to set to finally let me just understand how the market moves, let me just learn on my own how to actually trade, analyze properly the chart. I got to learn about market structure, and it has really helped me to understand even more how the market moves. Then, which pair did I actually look at today? Uh, which pair did I look at today? So these are the only pairs that I fixed my eyes on, which is your USD and DXY, and know that. So that's what market. It's very important for us to understand market structure. Then, as well as much as we are trying to understand how to trade market structure like this, we have to understand or learn how to use market patterns. So for those that don't really have this what can I call this image, you can actually do it. You can actually just go on your Google and just type continuation pattern. Make sure you either save it in your phone, on your laptop, or anywhere. It's really helpful when at least you have a trading journal book where you actually draw your forex. Is that a hand? Yes, Mr. Godfrey.
Yeah, it's just a contribution.
Yeah,
For me, those I just printed them out for the easier.
exactly. That's how I actually did it when I was first learning about this. I had them. I drew them on. Actually printed them out, and I actually had a book, a hardcover book, where I actually drew this whole thing, so that it became easier for me whenever I'm analyzing and I'm having my book here. I'll be able to simply refer back to the book and understand. So, okay, this is when I see this type of a pattern, this is what I expect the market to move. So it helps in your trading. If mostly if you don't yet have a laptop, it's the best way to go about it. It's buy a hardcover book, then you can just make it your forex book. Draw all these patterns, draw support and resistance, what you expect when the market reaches that point, so on and so forth, to become very easier for you to actually go through. So these are the patterns that we're going to be looking at, which let me bring out this whole thing. We're going to be looking at these patterns here. So it's almost our ending time, which we end at 22:30, starting from 21 hours. So this is going to actually be a homework to you guys before we're going to look at it tomorrow. Make sure you pick out any of your favorites or any of the patterns amongst these that's going to be easier for you to do it to be using. As for me in the market, the easiest patterns or my favorite patterns that I look to spot out in the market. It's this pattern here, this pattern, which is 1, 2, 3, 4, 5, 6, 7, 8. These are my favorite patterns that I use to spot, to identify market reversals and so on and so forth. So looking at this first pattern here, let us look at this first pattern. Okay, when we talk about market patterns, so market patterns have really helped me as well to understand, to say, okay, they help you understand where the market is about to change its overall trend, and it helps you to know how to identify a change in trend and as well as a continuation in a market trend. It helps you to understand a change in trend and as well as what a continuation in the market trend. So I don't think this is going to be very hard for you to understand, because these are simple patterns that are actually in the market. So let me save this for tomorrow. For today, we have actually talked about so many things. So let us save this topic for tomorrow. For those that didn't submit their homework on market structure, please find time tomorrow before we meet again on 21 hours in order for us to actually start our new topic. Make sure you drop your homework, any chart of your choice identifying a downtrend market structure, and any chart identifying what an uptrend in market structure. You you can submit your work as simple as the way I did it here, or you can submit it in a simpler way as I did it here. Same with this. So I want two charts from you. First chart identifying an uptrending market structure, and the second chart identifying a downtrending market structure. So if you know that you didn't submit your work today, make sure you submit your work tomorrow before 21 hours. So submitting your work really helps me to understand how you are moving as an individual. Forex is much easier if you are learning it in a group, but it's hard. It seems to be hard when you are alone on the charts. So I want to understand how best you're understanding whatever we are learning when you are alone, when you are an individual on your laptop, on your own. So that's the main essence for me, trying to see how you're crafting up the work on your chart. I hope that's clear. So Mr. Godfrey Moses, let me see your work tomorrow before 21 hours. So tomorrow, let us reserve this topic for tomorrow, where we're going to cover this pattern and this reversal patterns, trying to understand how best we can use this to our advantage. So for now, is there any questions that you guys want to ask? Or before we close, is there any, let me just pick 3 pairs of your choice that you think we may look at tomorrow or till Friday. What pairs do you think? Gold and which other pair? Usdjpy
GBP USD.
and GBP USD. So all those, they're under what we said last time as USD what? USD pairs. So I actually talked about how to trade USD pairs, which is very simple by using what? Using the DXY index. So what is the DXY? So if you don't have the DXY on your chart, make sure you add DXY, because it's very important and it's going to be very useful for us. For those that are joining us for the first time, on Saturday we're going to look at how to trade the USD pairs. We're going to talk about support and also from the scratch so that we are able to do what we are able to catch up with these other guys. So we're going to look to analyze gold right now. But before you analyze gold, you have to firstly understand how DXY is moving. Because we said last time we said, let me which pair, let me get this. Okay. Last time we said whenever we're about to trade the USD pairs, we have to firstly understand how DXY, which is dollar index, is moving. We have to understand how the dollar index is moving. We said if the dollar index is weakening, if we analyze the dollar index and find that it's weakening, we expect to see the USD XX to do what? To sell. And we expect to see the XX USD to do what? To buy. So that means we expect to see any pair that starts with the USD to be bearish. Then we expect any pair that ends with the USD to be bullish. So is there anyone among us that knows any pair that is found in this folder of USDXX or in the family of the USDXX?
USDJPY is an example.
Uh,
USDJPY is an example.
USDJPY is what? Is an example. Any other pair?
USD card.
USDJPY, USD cards. What other pair do we have? USD Swiss franc, and we also have what? We also have US oil. So these are the pairs that are under or that represent the USDXX. So whenever you hear us or you hear me say no, we are looking for selling opportunities on USDXX, it simply means we will be looking for selling opportunities on these pairs: USDJPY, USD CAD, USD Swiss franc, and as well as US oil. Then anyone among us who can tell us pairs that are found in the XXUSD pairs?
Euro USD.
We have Euro USD, Euro USD. We also have what? We also have GBP USD. We also have XAUSD, which is gold. We also have what? We also have NZD USD. We also have AUD USD. What else do we have? We also have what else do we have? We have
GBP USD.
yeah, GBP USD. I've added it. So you have your USD, GBP USD, gold, NZD USD, AUD USD. Let us just say ETC. So these are the two groups of the USD pairs that we have. So when the DXY, which is the dollar index, it's more like the mother. That's where we get the direction of the market. So if the DXY, which is the dollar index, it's weakening, when it's weakening or weak, let me just say, oh, it's bearish. Just use the word bearish. When it's bearish, we expect to do what? To sell to sell USDXX, or to look for selling opportunities on USDXX and look for buying opportunities on XXUSD. So you'll find that USDXX always goes where this one is going, as in the direction. So if this one is going down, you expect this to go down. And this XXUSD always goes in the opposite way of these two. So if this is selling, this will sell, this will do the opposite way. Okay, so now if the dollar index is buying, what do we expect if it's buying? What do we expect? We expect the vice versa of what we are done here. That means we expect to look for what? USDXX would be doing what? We'll be looking for what? For buying opportunities, and we'll be looking at XXUSD for what? For selling opportunities. Okay, so when DXY is bullish, we expect to look for buying opportunities on USDXX and selling opportunities on what? On XXUSD. So don't forget, this is our cheat code, or this is how to use the dollar index. So if you haven't, just screenshot, or if you can memorize it, make sure you draft it somewhere in your personal forex book, or write it somewhere so that it will be easier for you to understand whenever we talk about dollar index or the XXUSD as well as the USDXX. Okay, so as a person who's trying to trade the USD pairs, you have to understand firstly how to analyze DXY, or how to interpret the dollar index. So if we are to open a chart, let me open another tab for trading view. Since we have said we have to look at Usdjpy and gold and GBP USD. So before we jump to any conclusions on what what gold is doing, what GBP USD is doing, we firstly have to understand what the dollar index is doing. So let me just delete this whole thing that's here. Then let's redo our analysis. So I'll be using the 4-hour time frame, or let me just start from the daily time frame. Let me start from weekly time frame. Let us start from the weekly time frame, which will be known as the multi-time frame analysis. So multi-time frame analysis, this is when you start analyzing the market by using the higher time frame, then breaking it down to the lower time frame. So if we are to open our chart on weekly time frame, on Monday we talked about support and resistance, where we said the first thing that you need to do whenever you open your chart and you're about to analyze support and resistance, you firstly have to identify your highest point and what? Your lowest point. So in this case, our highest point is here, and my lowest point is where? It's at this particular point. So from there, my interest is to know how price is going to move in between this price and in between what? That price. From there, I'm going to get my resistance, of which we said, what is resistance? We said resistance, this is what? This is an area or level where the demand of an asset is high. As a result, as traders, we believe that when price reaches a level of resistance, then we expect a change in trend from a bullish market structure to what? A downtrending market structure. From there, we went on by also understanding or talking about what support is, where we said support, this is a level where the demand of an asset is strong enough to change the market trend from a downtrend to what? To an uptrend. So from here, what else are we supposed to do? Don't forget, last time I always told you guys to say, whenever you're analyzing, for me, I believe in having a clean chart. I believe strongly in having what? A clean chart. So make sure your chart is as clean as possible in order for you to avoid unnecessary doubting and, you know, confusion when you're having so many levels on your chart. So from here, we said you have to do what? You have to identify your minor support and resistance, of which we said you can easily do that by switching from a candlestick chart to what? To a line chart. So from there, a line chart will help you understand or to know what minor support and resistance you'll be going out for. Minor support and resistance, we're going to they are easily identified by using what? Price action. So price action, for you to understand what price action is, you firstly have to understand the definition of price action, which is the use of historical data used to predict what the future market movement. This means when you're analyzing as a price action trader, we take keen interest in firstly understanding how the market was moving here before we understand how it's going to move there. This means to say historical price movement has got an impact on how the market is going to react in the future. So we have in this point, and we also have in this point here. I'm also having this point, and I'm also having this point here. This means to say I'm also having this point here, and as well as, okay, let's take these points for a start. So always keep your chart as clean as possible. There are so many support and resistance levels, but the most important thing is to you to go for the most obvious levels. What do I mean by most obvious levels? What I mean is to say go for those support and resistance that seem to be strong, that are strong and are able to cause a reaction in the market. So what it means by price action is that it's the use of historical data. This previous action here, it's capable of affecting the market in the future once it comes at this particular point. That means if the market was to push to the upside and reaches this point, it's not going to break up easily. As a result, it's going to cause what? A reaction before it can do what? It can break to the upside. That's what the definition of price action comes in. So from there, let us take this minor support and resistance to be our minors before we can draw so many things on our chart. From there, this is what we are able to see on the weekly time frame. We are not trying to draw so many things. From there, we jump to the daily time frame. Are you guys able to see this screen here? Are you guys able to see this screen?
Yes.
Yes, we are.
Okay. So when we switch from a weekly time frame to the daily time frame, we can see that everything is aligning perfectly. We can see that price reached a level of support, bounced back. Price reached a level of resistance here. So this resistance here from this point to here, this is actually telling you to say this is actually an area. So support and resistance, it's not just an actual line, but it's an area which is identified by using what? A zone. It is an area that is identified by what? By a zone. This means in this area, in this zone here, there is what is known as what? Selling pressure. What does it mean when you introduce a zone? It means that when price can either touch this point, drop, can either come inside here and drop, can either touch this last part, then do what? Then drop. Why? Because of the pressure that's inside this zone. I hope it's making sense. So from there, if we zoom in on the daily time frame, what are we able to see? What we are able to see on a daily time frame is that at this point here, from here to here, we were what? We were in a downtrend. We were in a bullish market structure. How am I able to identify this? I'm able to identify this simply by seeing how the market was selling more, buying less, selling more, buying less, selling more, buying less, selling more. From there until we reached our level of what? Of support. So from there, we expect the market, we expect to do what? We expect to sell from resistance and buy from what? Buy from support. And buy from support. So from here, if we can introduce trend lines, we can find that the market was below this point. We're having this trend line on our daily time frame. That means as long as the market is below, it's trading below this trend line, it is a downtrend. It is not an uptrend unless the market does what? Unless the market gives you a breakout, a break above this trend line, which is known as resisting trend line. So what happened at this point? What happened at this point is that we experienced what? A break above the resisting trend line. So what does it mean when the market breaks above? It means the market is looking to create what? New structures. From a downtrend, the market will be now making the opposite of what? The opposite of this move, from the opposite of this, because as price action traders, we believe the market repeats itself over and over again. So we expect to have this type of market to reach that particular point. So you can see how the similarity on how the market is moving now. Yeah. Are you able to see the similarity now? If we are to bring in the opposite of this trend here.
Yes.
So this sheds more light on where we are going. So this sheds more light to say, okay, we are in a bullish market structure now. The market, as price, the good part about understanding price action trading is that as price action traders, we believe the market repeats itself over and over again. So if the market sold from here to here, we expect it to buy from here to here by doing what? The opposite of what it did here.
Last situation. I didn't say it clearly on that situation. The blue line that you get, the
Hello?
blue thing that you copied. Is it that you keep to bit a lot?
Simply, we can't really get you. I don't know if you're using headsets or you're using anything like that. But
I don't really get you. Can you put on the blue thing that you copied there?
so on this blue, what's the time? 22, close to 23. I was saying, as price action traders, we believe the market repeats itself over and over again. That means if the market sold from this point to this point, we expect it to buy from this point to what? To this particular point here. You understand? And from there, as price action traders, we also believe that the market always repeats itself over and over again. That means what's yet to happen here in the future has already happened. How can we prove that? How we can prove that is that we're going to take the ghost of this trend here and just do the opposite. That's where we're going to understand to say What is about to happen there has already happened by getting the ghost opposite trend of the previous trend like this. So from here, we expect the market to move in the opposite way from this to what? To that, all the way to there, because we're expecting the market to buy all the way to where? To that particular point. You understand?
Yes, I do.
That
Yes, I
means,
do.
yeah, that means we're expecting the market to push up here, break above, then come and sit at this particular point. That means we'll be looking for more buying opportunities from where? From that point, once the market comes back to sit at that level. And from here, we expect the market to do what? We know to see the market will do what? Will have some reaction at that point, then come to the downside, then break above, then have some reactions there until we get to where? To that particular point. Do you are you following? Are you guys following?
Yes.
Okay, so this is what we're having on the daily time frame. Let us move to the 4-hour time frame. So when we whatever I'm doing now, jumping from one time frame from the weekly daily, now we're on the 4-hour time frame. It is known to be what? Multi-time frame what? Multi-time frame analysis. This is when you use multiple time frame in order to get a clear market direction. So you have to make sure as you are coming down from a higher time frame to a lower time frame, everything is aligning together. Every time frame is agreeing with the direction that you're anticipating the market to go in. I hope it's making sense. So from here, we have reached the 4-hour time frame of where we can see this market here was consolidating there. So when we zoom in on the daily, this is what the 4-hour time frame, we can see that the market has been in a downtrend, has been below this resisting trend line, identifying that the market was in a strong downtrend at this particular point. So as long as the market is below this resisting trend line, it's a downtrend. Sellers are in charge. That means you expect the market to sell more, just like it was doing here. It is not an uptrend unless the market breaks above this point. It is not an uptrend unless the market does what? Breaks above this point. So we're only going to call it an uptrend once the market breaks above what? The trend line, of which it did what? It did break above. It did what? Break above. So if the market broke above, that means we are no longer what? In a downtrend, not so. And as we are no longer in a downtrend, we are now getting to form a new direction, which is what? An uptrend, which is a bullish market structure. How do we expect the markets to move in a bullish market structure? We expect the market to move in a zigzag pattern formation, respecting what? Respecting support and what? And resistance. That means we'll be expecting the market to do what? To buy more, sell less. Buy more, sell less. Buy more, sell less. I want you guys to follow me very closely here. Okay? We're going to expect the market to buy more, sell less, buy more, sell less. So this is the trend that we have on this point. So then if we come back, if we get back to this pattern here, we're going to be using more of what? This part to identify these patterns, which are identifying what? This green arrow here as the result. So we expect as the market is going up, it can either create any of these patterns in order for it to do what? To keep pushing to the upside. But for now, let's say we're going to be going for this. Let's mostly identify or fix our eyes on identifying this trend, this type of pattern. I told you guys earlier right now that this pattern gives you what? Two market entries. It gives you what? Two market entries. It gives you two market what? Entries. It gives you two market entries like this. That means you can either catch the market from this point, aiming to take profit from there, and you can also catch it above when it breaks above this pattern here, aiming to take profits where there. This becomes your entry point one with each take profit one there. This becomes your entry point two with its own entry point two at that particular point. So we're going to fix our eyes mostly to identify what this pattern here in order for us to make entries. I hope you're following me. Yeah? I hope you're following me very closely. So this is what we're going to be expecting when we are in an uptrend. So now let me just delete this. Let me delete this. Okay. So from here we can see the market is buying more, selling less, and it has shot up. That means we are now in a series that the market is creating what? This pattern here. Just like we said, this pattern is known to be what? A bullish flag or a bullish continuation pattern. What does it mean when we say continuation pattern? Whenever you see this type of pattern in this uptrend or in the opposite one, where the market pushes to the upside and enters into a consolidation like this pattern is formed so that there could be a continuation. There could be a continuation of this previous trend here. So the market actually makes this pattern so that it could make this be continued from the upside. So what do we expect here? We expect to see this movement. Is that a hand? Is that a hand? Can you see the growth structure on the forward time frame? Yes, you can do that on any other time frame. You can do that. You can do that on every other time frame. So what do we expect the market to do here? We expect to see a continuation of this trend. That means if we can use the ghost tool and just pick out this trend here, you'll find that this is what we expect to see. This is what we expect to see the market to move. That means there's a higher chance of us touching this level as our what? As our TP. So from here, let me end on the 4-hour time frame because of time. So from here, what direction do you think DXY is in? Madam Miranda. Yes, Mr. Godfrey.
Bullish.
The market is what? In a bullish market structure. The direction of the market on DXY is what? An uptrend. That means we expect the market to be going where? To the upside. So when we go back to when we get back to this, what did we say? What do we expect when the DXY or the dollar index is bullish? When we find out to see we have analyzed and find out that the dollar index is bullish, what are we going to be looking for? Mr. Godfrey, what are you going to be looking for now that you have discovered that the dollar index is bullish?
The USDXX buying,
Okay.
then XXUSD selling.
Exactly. Just like that. We're going to expect what? We're going to expect to buy or to look for buying opportunities on USDXX and look for selling opportunities on XXUSD. So let us just quickly see the practical of this if it's really true, if it's really what true. Let us open a chart on GBP USD. Let us open a chart on your let us use your GBP USD or your USD. So we're going to open one chart representing XXUSD and another chart representing what? Representing XXUSD. What's wrong with my network now? Okay, so we've identified that DXY is bullish. That means we'll be looking for selling opportunities on Euro US. Let us see the behavior, how the market behaved today. So when we look at Euro USD, when you just look at Euro USD right now, does it click anything? What similarities or what can you observe between Euro USD and DXY right now? Anyone? Before I can even explain, what can you observe on Euro USD when you're comparing it to DXY?
Euro USD is in a downtrend,
Yeah,
so meaning we should be looking for selling opportunities.
exactly. So DXY is bullish. As you can see, this, let me just give an example of this pattern, which is on Euro USD. So if on DXY. So if DXY is giving bullish continuation patterns to the upside, we expect XXUSD, which is Euro USD, to be giving the opposite pattern, which is a bearish continuation pattern. So Euro USD is in a downtrend and DXY is already confirming a downtrend, then taking us back to what? Taking us back to this that we were looking at. Taking us back to this. If the DXY is bullish, we'll be looking to sell what? For selling opportunities on XXUSD. What pairs are found under XXUSD? Euro USD is among them. That's the first point. So that means whatever we're looking at here, it's the correct information and it's very useful. That means you have to know how to use the DXY. Okay, so we have confirmed that when DXY is bullish, XXUSD will be what? Bearish. Let us look at any pair that has to do with USDXX. Let's open USDJPY. Where is the USDJPY? Okay, this one. Let's open USDJPY. Okay, so when you open USDJPY with the analysis that's already there, can you confirm that what we are talking about concerning DXY and what we are looking at right now, it's actually making sense?
Yes, it's making sense.
So this is how simple it gets whenever you are trading the USD pairs, or this is how to trade the USD pairs using DXY. Is that a hand? Yes, Mr.
Yes,
Godfrey.
let us try it on God.
So if we go back to God, so what pair, what group does God belong to? First, understand that. What pair does God belong to, Mr. Godfrey?
God, it's a commodity.
What? Yeah, it's a commodity, but what group between the XXUSD and the XXUSD does it belong to?
XX,
XXUSD.
XX what? XXUSD. That means if we open the gold, the gold chart, we're going to expect what XXUSD is doing. If we open this chart on XXUSD, which is gold, just by looking at it, you can see the nature of it, where the market is actually giving us a strong push to the downside, short move to the upside, strong move to the downside, short move to the downside. So what phase do we expect the market to make right now?
A downturn, a downtrend.
We expect to see what? A downtrend. We expect to see what? A downtrend. When we open, when I let me just zoom out right now. If I was to zoom out here, we can see that just like I was saying on DXY, as long as the market is above this point, now we're doing it the opposite way. The market is above this trend line, that means we're in an uptrend. It is not a downtrend unless the market breaks below at this point, of which it did and came back to give us what? A retest. So what we expect at this particular point is to see the market give us this move here. This move where at that point, because we are in what? In a bearish market structure, which is this. This is the pattern that we are in. We expect the market to sell more, buy less, sell more, buy less, sell more, buy less. That's what we're actually seeing. Sells more, buys less, sells more, buys less. We expect the market to do what? To sell more. So if we're to zoom in, we are actually having what? We're actually having a bearish continuation what? Pattern, which is this point here. Which is this point. That means if we missed this entry one from here, if we miss this entry one from here, where are we going to get or find, and how are we going to join this market? We're going to join this market by waiting for an entry to where at that point. That means for me, I'm actually aiming to see selling opportunities on gold as well, or catch it from here, apply proper good risk management. I'll be aiming to take my overall TP from there. That means here I'll be taking TP1. Here, yeah, there. Here I'll be taking TP1. There I'll be taking what? TP2. So you can see that all this is coming out. All these ideas and simple market analysis are coming from what? The analysis of what? DXY. All these are coming from the analysis that we made on DXY, or how to trade the USD pairs by using what? The DXY index. Has it made sense?
Yes.
Yes.
Okay, so from here, this is how this from here, I've actually shown you how to analyze the other USD pairs as well. That means we have looked at gold and Euro USD, and we have looked at what Usdjpy. So you're going to know what to look out for when you're trading GBP USD, or if you open a GBP USD chart right now, you will know why it's moving in the direction it's moving. You will know when you open the US oil chart, you will know why it's moving in the direction it's moving. So today we have actually eaten up too much time. So for me, this is where I'm actually going to end. Then tomorrow we're going to start on market pattern. So I'm going to leave you with another homework. Analyze the other remaining USD pairs by using the DXY. Then send in your chart analysis in the group on WhatsApp. So choose any XXUSD and USDXX chart of your choice that you're going to share in the group. Please also show what you're seeing, just like what I've done here, and make sure you add an arrow to show what anticipation you're actually looking for. Is it clear?
Yes.
Yes.
Okay,
All
so
right.
without wasting much time, this is where I end for today. Thank you for joining me. Let's meet tomorrow and have a blessed good night.